Alrighty guys, what is going on? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about the top tech stocks to buy right now. Now, we all know over the past couple of weeks, we've seen so much volatility among virtually every stock out there. And if we actually look at the S&P 500, you can see the S&P 500 has had great growth over the past year or so, and we've seen some sell-off where this thing has fallen from about $481 all the way to as low as about $411 in a matter of a couple of months. Now, a lot of people are freaking out saying, oh my gosh, we are due for a crash, we're due for a crash. And honestly, I understand where they're coming from. Do I think we're due for a crash? No. Do I think we're due for a correction? Yeah, I definitely do. The difference between the two is a crash is when the market falls about 20%. A correction is when it falls about 10%. On average, a crash happens every 4 to 6 years, and a correction happens every other year. And if you use it to your advantage, you can make a ton of money off it. And given that tech stocks lately have been hit very, very hard, for me, this just looks as an opportunity to pick up a couple of shares at some pretty good price points. Now, the strategy that I always use is dollar cost averaging. So if they continue to sell off like it's done, now, what we're going to do is continue to invest, and then once it recovers, you're going to make a lot more money because your average cost is going to be a lot lower. The very first one is Meta, also known as Facebook. Now, I know a lot of people say Facebook is over, and I understand where they're coming from, right? The social media site for the first time in company history reported lower daily users, which was kind of expected because anytime you have a site like that, even with Netflix, there's going to be a peak number of people that you're going to hit just because there's only a certain number of people out there. And as you guys can see, the stock got hit pretty hard. It went from about $381 all the way to about $187, which is crazy, over a 50% decline in a matter of a couple of weeks. For me, I can't compete. I can't compete with $40 billion in revenue that this company brings in. So for me, this is just an absolute no-brainer investment to pick up a couple of shares at a good price. And yes, I understand this could continue to sell off, but you have to realize that short-term volatility is okay as long as you have that 2 to 5 year outlook, which I do have for Facebook, right? They own Oculus, which is pretty much a headset for the metaverse, and I definitely think that's going to be one of the top sectors for this upcoming couple of years, but it's definitely a great one to keep on watch. The next one here is AMD, another one that has this beautiful upward trend, as you guys can see, and over the past couple of weeks, we've just seen some sell-off. Now, is it due to anything major going inside the company? No, it's just expected, right? A stock peaked up, went up to about $165, sold off, hovering near that $100 mark. That $100 mark for AMD is going to act as support, because if we actually draw it out right here at about $99, this is major support for AMD. Old resistance has a tendency to act as new support, like we established right here. For me, it already hit it a couple of times. We've got buying pressure every single time there. Not to mention, guys, AMD is a great stock. They don't own, but what they do make is graphics card computer parts, and given the rise of the metaverse and technology, do you think we're getting more and more dependent on computers? Absolutely. AMD is going to profit from that. The next one here is SoFi. Now, SoFi is a little one that is going to be more volatile, of course. It's a smaller company, but still has some great numbers and some great growth expected. Now, looking at it for me, I called out this stock several times when it hit, this $13 mark down in here. But yes, we've seen a lot of sell-off. For me, anytime this stock's under $10, this is just an absolute no-brainer. For those of you that don't know what SoFi is a fintech company. It's very similar to like a Robinhood, but it's a lot easier and there's more stuff on it. They make a lot of money. They doubled their user growth for the past couple of years, so I don't think they're going anywhere for me. Good one to at least keep on watch for sure. The next one here is NVDA. This one here is very similar to AMD. They virtually are competitors with each other, and as you guys can see, it does have some resistance and some new support stepping in at about 225. That old resistance is now acting as new support, given the stock sold off a little bit from its highs at about $350. For me, absolute no-brainer, dollar cost averaging this one all day long. This is just a great one to at least keep on watch and pick up. The next one here is Google. Now, Google is offering a 20-to-1 stock split. For me, guys, that is just a great thing. That brings a lot of short-term buyers into this, which can cause a little more volatility, which is good. Now, for me, Google is not going anywhere anytime soon. We've got a lot of sell-off from the highs. Great numbers, great revenue, way too much cash on hand that they have, but it's great for the company. Not going anywhere. Definitely, one to pick up a couple of shares if you don't have it. The last and final one is Apple. Now, looking at this one here, you guys can see resistance up here, support down here. For me, this could be a textbook swing trade. Buying on the support, selling at the resistance, and just make some money, guys. Not to mention, Apple is a beautiful long-term play if you guys have that outlook. But that is it, guys. I hope you guys enjoyed the episode. If you did, hit that like button, subscribe to the channel. We will see you guys later. Don't forget to check out my course down below. I dropped the price from $99 to $15. We'll see you later. Take care.